Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 0.6% there. On the S&P Nasdaq, 1.3%. Semiconductor close to 2%. Dow 0.6, along with the Russell 2000. Transport up about 1% there. Banks lagged a little bit. However, energy got hit on this seemingly green day today, about 3% negative. Biotech 1% positive along the healthcare. Home builders up 2%. Looks like utilities down. Retail's up 1.5% there. Emerging market is down about 0.7%. Bitcoin up 2%. Gold, silver, miners continues to get hit here. Down quite a bit, 2 to 3% negative on those guys. Dollar slightly up. Oil down. Treasury bond up. VIX is down about 5% there. Let's stick with S&P 500 ETF. Spider 65-minute chart here. So this is where we closed on Friday, and it looks like this is where we opened up this morning. So with that, we actually saw another gap down this morning. A little bit of fluctuation there on that first hour through that hammer candle there, but quickly it was invalidated with that bearish candle next day. And I tweeted out earlier this morning that bulls must protect this gap area right here, 416, 419, if they want to survive this bloodbath they've been experiencing in the last 2-3 days. And they were able to do that with that spinning top candle there. And then it kind of marched higher. Here's the interesting thing, because usually when gap gets filled, you usually act as resistance, right? And we've learned that. However, there is no resistance there. You can see we kind of thrusted above the gap area. And I don't see any, there might be some intraday resistance happening potentially, because obviously, each candle represents 65 minutes worth of data. So there might have been, if you go to like maybe 30-minute or 10-minute or something like that, there might have, I wasn't watching, so I don't know. Might have been it went up, came back down and got back up in that hour. I don't know. But looks like with that gap, down gap was filled. And we can kind of say that this down gap potentially was a exhaustion gap, right? Bears pushing at one last time, and bulls obviously kind of protected that up gap. We're gonna zoom out, and you'll see where this up gap coming from, and that's what I also talked about on the last daily update on Thursday night. That bulls, you're gonna face some difficult time going forward. No matter what happens, no matter how hard bears bring it down, you make sure you're gonna survive this. You protect this up gap. And they did that with that move. And then so on the last hour, they actually brought it above the gap area. And you can see that bullish top there. So what can we expect going into tomorrow? So obviously, as far as the overall sentiment is concerned, we got the midterm here. We got the short term right here. We got the micro term right here. So first objective is for the bulls to reclaim that micro term moving average and reprogram that to support the buyers, right? Because you can see that micro term is supporting the bears as of today. So you can see the overall sentiment is still bearish with that little bit of that, we got that momentum going. Remember, the one-day move cannot establish any kind of trend. They're gonna need at least couple days of move. So what bulls need to see is a follow through, reclaim that micro term moving average, and go check out that short term moving average in that gap, down gap area, and just kind of see, how they're gonna get along, right, with that short term and down gap in that area. So that's what bulls want to do. Obviously, if you're a bear, that micro term moving average could act as resistance, right? Because you can see that micro term been acting as that pivot, prior resistance, and then there was a support. We lost that micro term right here, along with the short term and the midterm tanked, right? So the short term and the micro term is still supporting the bears. So bears can utilize it to possibly bring it back down. And bears, you must fill this up gap, because if you don't, here, I'm gonna go back out here. So if you don't fill that gap opened up right here. See that? If you don't fill that up gap, bull's gonna try to figure out a way to at least probably retest that short term, possibly even see if they can go after that little down gap right about here. Let's check out that oscillator, see if we can extract any more information. So you can see that oscillator did hit that extreme oversold level, and last time we saw that right here. And what day was that? That was March 8th. And you can see when we did hit that, we did see that kind of that bullish candle there. You can see right here, right there. What happened was, though, last time when we did see that extreme oversold, right? Extreme oversold is that green line. It made a move. We made a little bit of move. You can see how it went up and retested short-term moving average right here, right? And that's kind of what I'm saying. I think because we saw that cross, just like here, I think at minimum bulls might want to retest that short-term moving average right here, similar to here. And then there's some shenanigans and stuff for a couple days afterwards. And we'll have to worry about that tomorrow or possibly in the coming days. But looks like that's what bulls wants to do here, is go up and kind of see how they gonna get along with that short-term moving average. We'll come back for you. We'll reassess the situation. Enjoy your evening and good trading tomorrow.